Alright guys, welcome at the weekly analysis. Today we will do a quick analysis of one pair which I am going to enter, and this is Aussie yen on a weekly time frame. And as you can see here, here's the candle. Okay, let's zoom in. Okay, firstly let's mark that. Okay, and actually the reason for entry excuse me, is this impulse leg. Now we've got a retracement, and now we've got a second push, creating a pin bar here with a heavy rejection. Okay, this candle closing below this ultimate high. Okay, and then we've got like some down movement. It's not the best, to be honest with you. Okay, there's still room to the upside, but what I believe is that price will at least hit this one-to-one level, which is going to be my take profit. Okay, so I assume that price will retrace to down there before hitting this level of a stop loss. Okay, this might be true or might not be true. Okay, but I'm willing to risk in this case 1% on that trade. Okay, and if we go on a lower time frame, is actually before going on a lower time frame, we can see that on a weekly time frame, this candle's close is below the previous candle low. This is a good sign. We've got a bearish candle. The size of a candle, I mean the strength of the body is not the best on a weekly, but if we go on a daily time frame, okay, there is actually a clear sign that this was a main movement, then a retracement on a weekly time frame, the second push. Okay, but afterwards, why I decided to place an order is because we've got this retracement and then false breakout to the upside. So we've got this initial low, high. Okay, we've got a higher low, but then we didn't get a higher high or retest, but we've got a lower high compared to this one, and now price is actually breaking with a strong candle. Okay, and if you go on a lower time frame, you would see that there is actually like a trend line, or even we can draw it like that. Okay, this is a different trend line. Okay, but okay, you see price could bounce very easily to the upside and continue to the upside. The trend line was good, the weekly was good, the daily was good, this was a strong movement. Okay, but price decided, the market decided to go sideways and then break through. Okay, and if you are familiar with three combo, here's an entry and here's the stop loss. So this is basically a weekly, a trading setup based on a weekly time frame, which is completely the same as we would trade on a 4-hourly time frame. The point is that we just check charts once per day, once per week. Okay, and that's it. I mean, it's really beautiful. Okay, I might even, as I'm doing more conscious analysis, I might even put a little bit of a retracement as an entry to get a little bit better risk reward. Okay, just like that. Okay, about the high, like that. Okay, and you can see just a small movement. Price will for sure retrace a little bit, even maybe higher or to up here, or even it might retest, okay, this trend line. Okay, and price might easily fall down afterwards. Okay, so I usually like these retracement entries if there's a little bit, because it increases a risk reward. Look at that, for quite some. Okay, for like 20%. Okay, so this is an average quality trade for me. On a 4-hourly time frame, actually it looks pretty good. Okay, but on a weekly time frame, which is my main time frame, it doesn't like this candle is not like the best one. Okay, compared to, for example, right here or anything like that. Okay, so I am more conservative in risk in this case. Okay, so that's it. Okay, the next setup, which is a little bit more, I would say, not so obvious, is the cat Swiss on a weekly time frame. So this trade I'm actually not going to enter, so I just want to explain my thoughts behind it, just so you know. Okay, so the reason why MT4 got frozen is because the market just opened, and the week which we're looking is this one. Okay, this is already the new one. So what I'm looking at this candle is actually based on this extreme movement to the downside. Okay, I am assuming that price will retrace a little bit to the upside for sure. Okay, especially because we've got this rejection candle and now we've got a nice small bullish candle. Okay, this candle is inside of this one, so this is definitely sort of a getting squeezed price action on a lower time frame. But what I'm noticing here on a daily time frame, that we've got a nice this explosion and then like smooth movement to the downside and to the upside. And this candle pattern, if you just look at this daily candle pattern, it looks very bullish. Like price could easily reach that area for sure. Okay, but once again, let's put it. I will not place my trade. I mean, I will not place this trade in my trading account. Okay, let's assume that there's a market order. Okay, and the stop loss below this candle low, and the take profit, I actually assume that price will reach that area. Okay, the reason why I'm actually not, and you might be asking yourself why you're not entering that, because I think that price could retrace to up here or maybe up here, and the risk reward is not in our favor. Okay, for 1-to-1 it should be around right here. Okay, but I would not feel comfortable leaving open trade like that, especially because there's some swing lows even lower. So I personally would bet that there is a place to up to this level, okay, which is less than 1-to-1. And it would be even better, to be honest with you, to put a stop loss below this swing low. Okay, but then it would be even harder to trade this trade. Okay, so let's just make that. Okay, thank you, like that. Okay, and we will see in the upcoming weeks. Okay, just to see. Okay, and on a lower time frame, the 4-hourly time frame, when I was looking previously, it looks very bullish, like it's going to break. Okay, but what's the problem? What prevent me for finding a way to enter that is that there's a trend line. Okay, it looks like it's going to be broken pretty fast. Okay, and also on a lower time frame, it looks like price will reach that area, but I'm not so sure about it. Okay, and if we just draw a Fibonacci retracement, okay, the 1-to-1 would be at around 38.2%, which is very likely to happen. Okay, but still the ratio is not in our favor, and the stop loss is not optimal. It should be lower, and this would also damage our risk reward. So I'm just observing this as a learning trade. Okay, and that's it. So we are in Aussie yen, entering Aussie yen. Okay, I'll talk about my trading. Okay, you don't have to trade that, of course, guys. Please study. I mean, trade the trades which are according to your plan. Okay, and if you would like to know how I trade, there's a complete course on a weekly time frame trading. You can check the link in the description, or you can contact me via email at info@forexintraders.com. Okay, next, the active trades. Okay, luckily we were in a pound CAD and euro CAD, and I will tell you what I did on a pound CAD, okay, and I'm very happy that I did it because I noticed a pattern, okay, in the beginning of the week. I checked charts, okay, and because I was observing the pound CAD, okay, sometimes it happens and sometimes it helps, and also sometimes it doesn't. For example, I will just show you this example. For example, if I would not monitor euro dollar at all, okay, if you remember, the entry was right here, okay, and the price did not trigger that in the first week, okay, our entry right here, but the take profit was already hit, so I canceled this order, okay. But then on the second week, the price would trigger our entry, and in the last week, it would hit our take profit. Okay, so it would take just 3 weeks to hit our 2% take profit. Okay, so I missed that due to the rules and due to the active management of it. Okay, but on a pound CAD, if I wouldn't cancel an order around this area, there would be a high chance that price would hit my take profit pretty much very soon. Like, there's a high chance that price will reach it, or maybe not, maybe I'm wrong in this case, and it would be better to leave it as it is, okay. But what I've noticed from the price action is that price reached that area, rejected the second time, and the order was not hit and triggered here. And afterwards, when I saw a price action right here and price did not trigger my entry order, and I saw this bearish candle, this was a signal to me that there's lots of bearish power, so I canceled this order around the break even, okay, and it price fall down. All right, so this was the reason why I canceled it. The second reason is because I was already in the euro CAD and the pound CAD, and they pretty much correlated, okay, so I was 3% exposed on these two pairs, which was, for that situation like that, was too big, okay. Too big. I wouldn't feel comfortable, okay, after seeing this kind of a price action to get into 2% trade, so this is why I canceled it, okay. So this was a good move, at least I see it like that, okay. Maybe price might retrace before that and move to the upside, and I might regret it, okay. But this is part of the trading. You cannot avoid these kind of things, okay. It's easy to say, okay, have rule like that, don't have rule like that, things like that. But at some point of time, you will also realize that trading is very much discretionary. You can't make it so hard and fixed rules that you just do always everything right. It's always some discretion, subjectivity in the trading process, okay. So when you go with the flow and you understand that, okay, sometimes you'll decide right, sometimes wrong, but if you have a good risk reward, or at least you find an edge on the long term, that's it, okay. That's it. Next, the EuroCAD. I'm still in EuroCAD, okay, and I was also thinking about averaging down from 1% to 0.5% risk per trade, okay, but still I'm in a full position. The price is near the stop loss, but still price is as it is, okay. Even though if I would enter with a buy stop order above here, maybe I wouldn't be in that trade if I would put a buy stop order above this swing high, okay, maybe, but I would put it around right here. It depends on the spread. but this is how it is. Okay, so actually that's it. I just wanted to show you Aussie yen, a new trade. The cash is just my thought about it. Okay, because when you have such an explosive movements, there's always a correction. Okay, but how far, we'll see, just to test it out. Then I show you guys how I went out of the pound CAD due to this price action of this explosive movement and inability to break through 3 times, which is a sign of a weaknesses and bearish potential. Okay, and then I showed you a euro CAD, okay, leaving it as it is, and I show you the euro dollar, okay, so how it would hit our take profit if I would just leave it. So this is, guys, a real transparent trading. And let me know, guys, down in the comments, what do you think? Okay, what do you think about the weekly time frame? Where are you at the weekly time frame? Is it interesting to you? Is it not interesting to you? Checking charts only once per week, or in certain cases, if you see certain price action, there is maybe a need to monitor and to check the price, especially if there's a big exposure. Okay, so I trade with a little bit higher risk, okay, because I am comfortable being exposed for 2-3% per trade. Okay, but have in mind, if you are exposed in 3 trades with 3% risk, this is 9% risk. Okay, I mean exposure. So if there is an exposure like that, you can also, and this is a little bit more advanced way of trading weekly, is you actually put a rules inside, which tells you that if there is no like favorable direction, pretty soon that you reduce the trade or close it totally or hedge it or any kind of like that. Okay, so if I would be trading, for example, like 0.5% per trade, I would probably not bother that much, okay, or deal with it. Okay, but since I'm trading with like 1%, 2%, 3% per trade, okay, the decisions are much more important at the end of the year. Okay, so like 1 or 2, 3 trades, winning trades more, and or cutting 2-3 trades per year on a weekly time frame can make it or break it. Okay, so this is somehow important just to let you know this is a different perspective on a weekly time frame, but I would like to hear your perspective. So what are your thoughts on a weekly time frame? Do you see it beneficial? Would you like to see more videos on a weekly time frame? Would you like to see more videos on a daily time frame? About daily, I cannot promise, to be honest with you, because I'm not actively trading. I'm just checking once per week, maybe in a rare cases, as you saw on a pound CAD. Okay, because this really brings, at least to my lifestyle, the most freedom, the most relaxed way of trading, and even high returns. Okay, don't understand weekly time frame as being slow or unprofitable. It is slow, yes, but it is not unprofitable. Okay, because if you calculate about the taxes and commissions which you pay on a scalping or day trading, making lots of trades, if you calculate it, you are paying a lot. Okay, for much more work and time. Okay, so guys, let me know what are your thoughts, and hope to see you, or hope to read your comments down below. With intention to build a community, also feel free to join to our free group on a Facebook. There's a link below. And until then, guys, I wish you all the best and take care. Bye bye.